Everybody. Hello. Welcome to Grass Valley. Typically, to get a big crowd like this, we have to put a big sign up that says free beer. But obviously, this is a topic that is of utmost importance to people. I'm Lisa Swarthout. I'm the mayor of Grass Valley, and I'm here to welcome you all to this meeting this evening with our insurance commissioner, Ricardo Lara. We are so pleased that he has come here to answer all your questions and give us information about what's going on with our fire insurance. Obviously, an extremely important topic in our community. So with that, I get the next elected official up here, my very good friend, former mayor of Grass Valley, Dan Miller, District 3 Supervisor. Thank you all again for coming.
Lisa and I, we have history. I want to tell you how proud I am and impressed by the turnout here this evening for an issue that faces our entire community. Nevada County, when we have to show up, we show up. And I know that the crowd here this evening or this afternoon is anxious to hear what Commissioner Lara has to say, the information that he has. I want to thank his staff for working so closely with county staff and the CEO's office and senior board analysts Jeffrey Thorsby and Jen Tamo, Elise Strickler, and Taylor Wolf. Without their coordination and cooperation, it would be hard to put an event like this on. And this isn't the only place. There's overflow at the Rood Center. And so what you're seeing here, they're seeing over at the Rood Center, live streaming on TV. Thanks to Commissioner Lara and his staff for addressing this insurance issue and making it a priority for his department. This is a big deal for our community. It's a big deal to have the state insurance commissioner here personally to listen to us and to help us deal with a problem that we're all facing. You know, I've been meeting with many of my constituents, neighborhoods, businesses, and I'm part of a regional local government ad hoc committee that specifically is dealing with home insurance and the availability that's affecting most of us. We know there is shared frustration. We know there is confusion. We know there's anger. We recognize this, but there are no easy answers because it's taken a long time for us to get to where we are, and now we're going to have to face it. There is a saying that words are cheap. Well, Commissioner Lara is not here to simply deliver words. He is here to help us, to help our community get through a crisis that has been brewing for quite a long time. And we are here to listen to his plan and his strategy that he is creating with his staff. I've got to applaud him for being as proactive as he is and going to different communities across the state and meeting with the neighbors, meeting with the residents, and meeting with the homeowners who are being non-renewed or who've seen their insurance premiums rise dramatically. And there's really no blame here. I mean, it's been created for a long, long time. Don't get mad at your local insurance agents. Please, it's not their fault. And they're also friends of mine. As a community, we are already dealing with the problem of vegetation management. So we are working with the Fire Safe Council. We're working with Office of Emergency Services. We're working with CAL FIRE to mitigate those problems, along with our fire districts. Firewise communities are being certified around the county as our residents harden their neighborhoods by eliminating ladder fuels. We now have WUIs to deal with. And a WUI is a wildland-urban interface. It's a new term that you're going to be hearing a lot about. And what a WUI is, it's a forested open space that borders our neighborhoods, that borders our residential areas. And WUIs can affect your insurability. These WUIs impact your insurability, and we need a strategy to lessen their effect on homeowners. We are working with CAL FIRE on the Ponderosa fire break to give our fire departments an opportunity to stop a fire before it becomes catastrophic. We have a lot more to do, and it will take all of us to get the job done. So with that, I know that wasn't really warm and fuzzy, but it's a reality that we're living with right now in Nevada County and across the state. I'd like now to introduce Supervisor Ed Schofield, District 2.
Well, Dan did an exceptional job, and I will say we're here tonight to listen to our state insurance commissioner. So I think that's all I really need to do is say thank you for being here, Ricardo, and welcome to Grass Valley, and the stage I give to you.
Is the mic working? We're supposed to be fancy with the working mic, so we'll see. Yes. Oh, and the clicker. Still working? Can you hear me? Got it? Maybe it's not on. Okay, is this better? Okay. All right, we got it. We got it. We got it. First and foremost, before I begin, I want to take the time to thank you all for being here. This only, again, validates the problem that we've been hearing about and that our department has been struggling with for so many years now. I want to thank you for being here. And this is my 9th or 10th visit to rural California to meet with several county leaders to address and try to strategize how we address the issue of non-renewals in these beautiful parts of our state. I try to do my best to wear my boots, not bad for an LA kid, but people said, no, you're still too urban to fit in. So I get it, but I try. I wanted to tell you that since I have taken helm of the department as your California Insurance Commissioner, we've had to deal with the immediate impact of the fires. We have then had record floods in the Guerneville area, and we have been dealing now with the earthquakes in Ridgecrest in California, which is a way of life for us Californians, right? And unfortunately, it's something that continues to be exacerbated through climate change and the issues that we need to face, and our issues that you are living with every day and are seeing firsthand. We haven't had such extreme weather like this ever before. And so we're seeing the confluence of these issues now really taking shape and affecting the availability and affordability of insurance in your communities. What I want to do is provide you with a presentation that really is an amalgamation of what we've been hearing for now 7 months since I took this office, and try to encapsulate all the issues that we have been investigating and that we have seen, and give you what we think is an appropriate way forward that we need to work with our legislative colleagues and our governor to get us to give us the authority and to approve some of these critical measures that are going to be important for our California consumers to be able to still have options for insurance and be able to protect ourselves from these non-renewals, which we know are happening. So we are going to begin. So essentially, the Department of Insurance recognizes that homeowners, especially folks in the WUI, as our supervisor talked about, are experiencing non-renewals. We in the department have seen a 600% increase in complaints on non-renewals since 2010. So we're tracking this information. We've also seen premium increases, more than 100 rate increase filed. These are what insurance companies file with us to adjust their rates. And usually when I say adjust the rates, means they want a rate increase on your policies. We also are seeing that there's a lack of availability in insurance in the traditional homeowners and renters market in these communities in the WUI. And we also know, as a lot of you already know, that the FAIR Plan is not a comprehensive traditional homeowners insurance plan. That is a bare bone policy that does not cover sufficiently. So we recognize these are some of the major issues that we're seeing. So what is driving this increase? We've had 10 of the 20 most destructive wildfires in California's history have occurred over the last 3+ years. And that's important because you're going to see that that is what the insurers look at. They look at your recent history of that community to adjust their rates. We also know that as risk increases, the cost of insurance is increasing and the availability of coverage is decreasing. Again, I know these are things that you already know, but I wanted just to point out that we recognize that. And insurers consider the very recent past to underwrite and determine rates for every near future, which to date we've estimated with $25 billion in losses for the insurance industry only in 2017, 2018. That doesn't take into account 2019. So let's talk about residential underwriting and new school and old school, right? And I'm sorry for covering folks, but I'm going to try to walk around. The old school way is the insurance company would come in and assess your property, right? They would look at your defensible space. They would see what you've done to harden your home. That is what insurers traditionally evaluate each home based on almost entirely its own characteristics and its own condition. Today, that has changed. The use of technology has shifted, and now we see that homes must first pass through an evaluation filter based on satellite imagery. So this is what they look at now, right? No longer are they going down to the granular level to look at your actual property. So and the satellite imagery region evaluates slope, fuel load, and type of fuel and access. I have to say, the department needs the tools to be able to validate this data, which we don't have now. So this is why we hear, well, I was a 4 and all of a sudden now I'm a 6. They haven't even come and inspected and they've dropped me anyways, right? This is the story we hear over and over. So I want to be clear in terms of what we have as tools to address non-renewals as a department now. I have this slide because I want you to know what we currently have as tools I feel are very insufficient to protect consumers. We know that the insurers before they non-renew you have to give eligibility guidelines for the new policies, and renewals must have an objective relation to the relative loss of exposure. They must not be able to unfairly discriminate, right? That is in statute that we use to make sure that they're not discriminating when they are non-renewing folks. We know that the insurer has to provide 45-day notice renewal, which you all are familiar with that. You also understand that, and the insurers have to provide the applicant or insured with specific reason for the declination or non-renewal, and we know what that reason is, right? Fire risk. That is what they're using to non-renew you. So a couple changes that we worked on. We also know that a minimum of 2 annual renewals are required for those that have had total loss after a fire, when it's declared a disaster by the governor, and 1 year of continued coverage for homes in areas within or adjacent to the wildfire. That is to give people appropriate time. We know 45 days are not enough. And I did legislation when I was in the Senate to give an additional year of guaranteed renewal for those homes that did not suffer total loss, but are in the area adjacent to the fire, because we know that even if you didn't have a total loss or you didn't have a change in risk, you were still being non-renewed. And so we wanted to at least give those folks an additional year of protection to make the appropriate changes and planning for you and your family. So what all these issues essentially conflate to, and what we've realized as a department over the years, is that the underinsurance and non-renewals continue to be a massive problem in the WUI. We know that the 45-day notice is not enough and is insufficient. We know it doesn't take into consideration an individual's tenure or claims history. Many of you have been with the same insurance company for over 30 years, and without explanation, you get dropped. They don't take into account any tenure or any time that you've been with this particular company, and there's no consideration for pre-fire mitigation, right? You hear that time and time again, that you've done everything that you've been asked for to harden your home, but yet you still get dropped. And even if there's no change to your individual risk of your property, you still get non-renewed. And we also know that there's no clear statewide standards for community-wide mitigation. And that becomes very important because as we know that the insurance companies are utilizing technology to do regional maps, we don't have, as a state, statewide standards to say, hey, this is what we need to do as a community to be able to lower our risk so that we get the traditional insurance companies to come back into the market. And so what we're proposing, and I'll highlight a little later, is we're proposing that we actually get together with the insurance companies, first responders, with the community to actually flush out what appropriate community-wide mitigation standards would look like. So that there's a clear understanding from everybody on a community level what needs to be done to lower risk. It also allows us to be much more proactive as opposed to reactionary after a fire occurs, so that we can demonstrate that we're, as a community, working together. What currently exists now is essentially a patchwork of different programs throughout different counties. But even then, you still get non-renewal. So this is why we want to bring the insurance companies together, bring the first responders, the communities, to work on a community mitigation plan that is still going to allow for some flexibility to allow us to make sure we lay the plan over specific communities, and it's still fluid enough to be able to allow us to meet the uniqueness of that community. But at least as a state, we have come together and said, these are statewide standard mitigation measures that we've approved, that we've put in statute, that clearly have the input of the insurance industry, so that we can all say, wait, we've done this as a community. This is what's in statute of what we need to do, or what we've agreed on with the insurance companies and the experts, so that we can lessen the risk, which is what we want to do ultimately in these communities. We want to lessen the overall risk, not just focus on the parcel, but as a community, what we need to do, which also informs our local leaders, which thank you, by the way, for hosting us today, informs them of what we can do as a state, and it gives them a proper roadmap of what needs to happen in the particular community. We also understand that the FAIR plan is completely insufficient, and that if we actually want a plan that's actually fair, is that it's going to have to be a plan that has higher limits and that has more comprehensive coverage. So you don't, for those of you that have the FAIR plan, do not have to then go out and get additional coverage to be able to build out enough coverage to cover your entire property. It makes no sense to have a bare bones policy that you as a consumer are going to eventually having to pay administrative fee on top of administrative fees because you keep having to buy additional coverage. We want a FAIR plan that's actually going to be fair and give you comprehensive coverage. So if it is the insurer of last resort, that you only need one policy, and that's going to be the FAIR plan with appropriate coverage and a more comprehensive product. We also understand that many folks that live in the WUI communities are folks with fixed incomes, are people who either have decided to retire in these beautiful communities that no longer have the earning potential that they've had to be able to sustain the changes and the upgrades that need to happen in these communities so that we can be better protected. We also know many people have been pushed out of the urban core, and that's a reality. And we also know that that the insurance coverage that we have now did not take into consideration the convergence of all these issues that we are starting to see now, with extreme heat, extreme wet weather, with the issues that we're seeing around lands that are federal lands that are not being tended to. These are all a confluence of issues that, weren't considerations back when you first moved here. This is the new reality that we're living in, and hence we need to update our protections so that they take into consideration this extreme weather and the confluence of issues that you now find yourself in that are leading to non-renewals in your community. We also know, and we've seen this time and time again, inaccurate coverage, your coverage A, which is your dwelling coverage, those inaccurate estimates are leading to and contributing to underinsurance. And so many people have come to me and said, I thought I was fully covered. I kept paying my policy, assuming that I was fully covered, but I have never reviewed my coverage A. I didn't get an estimate once a renewal estimate once my policy was renewed. Nobody came out to inspect my policy to see if I was properly covered, or there was maybe not a cost of living adjustment. And so we see that over and over again, and that's leading to not only underinsurance, but people assuming that they're fully covered and after a fire can no longer rebuild to what they thought they could have. And so we need to work together to make sure that that the onus is not just on you, the consumer, to understand what your coverage A is. We want to put some onus on the insurance companies to have to notify you, come out and inspect, and give you an updated estimate, and then you make the appropriate decision for you and your family. But leaving it all on you to understand your insurance coverage is unfair. Because I'll tell you, when we're going through your individual, the amount of anxiety that I see when I ask people, do you understand your coverage, is real. And people just want to sign, assume they're covered, and no longer want to think about their coverage. Well, we know that folks in your community, folks that have gone through these fires, do not have that luxury. And so we need to put some of that onus on the insurance companies to help you understand what your coverage is. So we also have done our homework after meeting with so many of you and having our department come out year after year. And we know that the best way to increase availability and affordability of insurance is to decrease the overall risk for the entire community. And you know this already, but I just want to make sure you see it one more time. I can't say this enough, this includes looking at where we build and investing in pre-disaster prevention and mitigation efforts. That includes looking at our building codes, fire-resistant modifications. We have to look at our land use policy and planning, community-wide abatement or mitigation measures, defensible space, enhanced infrastructure, and wildfire sensors, right? These, I think, we can build upon this as we continue to look at the nuances of each particular community. But essentially, these are the key issues that we see we need to continue to work on together as with our local electeds, with our community leaders, and with our state legislature. So this gives you essentially what we're looking at in terms of a path forward. The left hand, the right hand, or to your left list here gives you what we are currently working on and what is within our power as we move to address these issues. Again, highlighting another aspect of the bill that I did last year, now is a requirement for insurance companies to report their fire loss data by wildfire risk score, protection class, and zip code to create a more credible rating data for us. We couldn't collect that data before. Now we are collecting this data in statute, looking at and require the insurers to report this fire loss data when it comes to how are they assessing their risk score, protected class, and zip codes to be able to inform us where this is happening. Before, to date, we were just looking at, through hearsay, we're hearing that this is happening. We are hearing that, they're not renewing these communities. This now gives us the data, this is the data we just released, correct, staff? Oh, the last point, okay. We're also now requesting detailed information and ensure rate filing. So when they come in with the rate filing, they specifically have to tell us how wildfire risk scores are affecting these rates, right? We didn't have that before. And for increased transparency, and so we can get increased transparency on how homeowners' wildfire risk scores are affecting their premiums. We didn't have that information before, now we're collecting that. And we just released our updated non-renewal data to reflect the impact of the 2017-28 fire season, which we've made that public now, which essentially says what you already know, that non-renewals are occurring in the WUI at higher rates. Oh, let me go back. And this is what we are going to be asking for the governor and the legislature to take into account as we continue meeting with them and hopefully get them to approve some of these policies during their legislative session. One, we want to make sure that insurers write or renew homes that are hardened and are located in wildfire mitigated communities. Essentially saying that you cannot not renew somebody who has hardened their home and has done absolutely everything to protect themselves and are in wildfire mitigated communities. Now, that would be a first for us. We don't have the authority as a department to force insurance companies to write in a specific community. We don't have that authority. We're asking for that authority, in particularly in homes that have been hardened and have met the wildfire mitigation standards set forth by your county or by whatever program you're abiding to. We want insurance companies to have to write insurance there. Second, to address the underinsurance issue with complete replacement cost estimates in writing to you annually, and the insurance coverage for building code upgrades and to comply with building codes. Which essentially what we're saying is we want your insurance to help cover building code upgrades, to help you pay and help you lessen and incentivize you all to continue to build up to standards and to do the mitigation that you need that currently is not included in your policy. That is essentially what we're asking the legislature to give us the authority to make sure that your insurance products cover the upgrades. We also want to make sure that extended living expenses, which are ALE, to homeowners who suffer partial loss of a home or suffer from causes due to fire damage of essential infrastructure. This is very important, especially for folks out in Paradise who you might not have suffered a loss or a partial loss due to the fire, but you are not entitled to additional living expenses through your insurance because they say essentially you could move in back to your property. But how are you going to move into your property if you have no water, if you have no energy, no electricity? Or how about if your septic tank melted and now there's an environmental hazard in your property? You can't move back realistically into your home. So we want additional living expenses covered for those homeowners as well that may not have lost but are adjacent to a fire or in a fire zone that miraculously the fire skipped over. We know, as I said before, the 45-day period for you to get notified is ridiculous. We want 180 days advance notice to policyholders. Once we want the 45-day with an additional 180-day notice, essentially around 6 months, of a policy of non-renewal. We think that's more appropriate given the fact that we're facing unprecedented climate change and extreme weather. We want people to have more time before they get non-renewed to make and understand what their choices are and to call our department so that we can help you assess what are the best options for you and your family. So those 45 days we know is completely not enough. And we want to allow more flexibility to policyholders in submitting their contents and inventory claims to insurers. To me, it is unfathomable to ask people to give you an exact inventory of contents after your home has burned to the ground. And you're not only trying to assess what just happened, trying to understand the trauma that you just went through, but yet your insurance company is still going to force you to go through a detailed list of contents. It is inhumane. And we want more flexibility to say, hey, if, for example, give us 80%, give us 95%, give us some flexibility so that we are able to make that decision for your family and yourself. And then after, if you want to claim the 100%, you do the detailed inventory. But we want to allow some flexibility for you all to give you an opportunity to just figure out how we could be more flexible and not be so stringent and rigid on this content. We want to seek authority to verify these fire risk underwriting scores and models that are used by insurers. These are all private, independent contractors that we have no authority to look into their black box and see how are they justifying these new risk score models. What is the data they're using so that we can at least verify the accuracy. Have you really gone into the granular level to look at what the community has done to mitigate before you non-renew, or just use this map, this satellite map that really doesn't tell you really much and just looks at the slope and the topography and the geography of the region to determine what the fire risk score is going to be. Lastly, we want the FAIR plan to actually be a FAIR plan. We want to increase the policy limits under the FAIR plan and the guarantee limit to actually make it an actual comprehensive coverage for you all. And if we do all this mitigation, if we've done all these policy changes that give the department much more hearsay and the authority to protect our consumers, that even if they still non-renew us and the FAIR plan is the option, that the FAIR plan is actually a comprehensive plan that won't then force you to go in and start to get additional coverage to wrap around your bare bones policy, which to me, it not only increases the cost, but you keep paying these additional administrative fees to insurance companies to give you what should be really one policy under one company. So, went forward. These are the proposals that we are working in the legislature and that we're asking our governor to help us with. How do we respond to incidents? And I just want to remind you, after we saw the data, after we heard from your county and city officials, and we did our own research, we understood that the non-renewals and affordability was a massive issue in the WUI. So instead of us waiting for you to come to Sacramento or waiting for you to call the hotline so that we can assist you, this is why we're here today. Today is our first community strike team meeting to address non-renewals. And by the show of and participation clearly demonstrates that not only your local electeds were correct, we were correct in assuming that this is a major problem in these communities. So we are going to be coming to you. And we have our experts here to answer your question, and we're prepared to stay as long as we have to either get your information, open a case, be able to have that conversation with you, with our department professionals that are going to be here and help answer some of these questions in detail. And we have cards. We will be, I have to say, we're going to be in Placer County Wednesday, August 28th, in the Auburn Fairgrounds. We're going to be in the city of Sonora City, Thursday, August 29th, at the Opera Hall at 6. So that is our commitment from a department and from me, that we are actually coming to the communities. We're not going to wait for you to call us. We're going to come and have those conversations with you. We have the consumer hotline, 1-800-927-4387, which I know it's a 1-800 number, and I know that gives people some pause. Are we going to leave a message? Are we going to not get a call back? We actually have live people Monday through Friday answering calls, being able to walk you through what your options are. And in the slight chance that you actually, and we'll put this up in a bigger slide, in the slight chance that you have to leave a message, our callback rate is 2 minutes. So we have live people dedicated to making sure that we talk to you and that we open a case and that we follow up. That is what we do. And we have an entire department dedicated to doing that. This hit me after we met with Placer County officials. They did a survey of the residents and said, how many of you have contacted your Department of Insurance after you've been non-renewed? It was like 90% of the people did not know to contact us, and that we had a hotline with actual professional folks being able to give you options. Hence why I said, no, we're not going to wait for people to call. We're actually coming to the community. And this is exactly what we're doing today. These are things that I've done through my authority as insurance commissioner, and have sent notices to the insurance companies saying, hey, we need your help, and we want you to do the following things. We requested the insurance companies to extend additional living expenses and not to deduct the land value to the survivors of the 2017 wildfires. This is directly impacting the folks from the Santa Rosa fires. Their ALEs is about to expire. Some people have taken them months to even get into their property. That should be taken into consideration before your ALEs run out, and now you're forced to go back to a company where you still can't access or be able to live in that home. So some of the companies have agreed to extend the ALE limits, and some have agreed to not deduct the value of their land when it comes to when folks are trying to buy a home somewhere else or trying to rebuild somewhere else. We've also said we want to make sure that out-of-state adjusters who do not know the consumer protection laws that we have in California, they need to comply with our laws. So they are not giving people wrong information. So they're not making people sign any document in duress, that they understand the protections that we have in California for you all to make that appropriate decision. We've asked that of the insurers. We want expedited claims handling. We've sent a notice urging insurance companies to expedite claims and offer billing grace periods. Again, it's the right thing to do. It's the humane thing to do after people have suffered from these fires. We want to make sure that they have these expedited claims so that you can get back on your feet as quickly as possible. Again, home inventory, urging the insurers to waive the requirements of a home inventory. It is ridiculous to me to ask you to do a home inventory list when your home's burned to the ground. How are you going to do that? And how are you going to do that in due time? And how are you going to be able to do that under the duress of what just happened to you and your family? You know, I'll never forget one of the conversations we had to some of the Paradise survivors. Parents still did not know how to talk to their children about what just happened. And the fact that their children do not want to go to sleep at night because they're still scared that something's going to happen. So what we did is we dispatched immediately the Department of Mental Health. We dispatched the Department of Social Services to help us, to have people just have somebody there to listen to them, to have a conversation and try to seek out some sort of way of how do we move forward from this massive catastrophe that just happened, and how do we have that conversation with our children, with our loved ones, with our seniors. We've done that at the disaster response sites as well. So these are notices that I've sent as insurance commissioner asking the insurance companies to do this and work with us. Again, enforcement efforts, we have in our department some very, very talented law enforcement officers, investigators that go after insurance fraud. That is their job. And we have them available to you as well when you call our number to make sure if you feel that you have been a victim of fraud or that there's anything fraudulent happening in the community that you see when it comes to insurance, we have folks that can take down your information and we can do the investigation and do the investigatory work to make sure that, you know, that's not happening in your community. And that doesn't just go, by the way, that the law enforcement unit isn't just for homeowner insurance, but if you're a senior, if you see something that's happening just in general with fraud and insurance, it could be automobile, it could be people taking advantage of our seniors, trying to defraud them from their life insurance, from their savings, from their anything that has to do with fraud and insurance. We will investigate it, and we will make sure that, you know, we get back to folks on the outcomes of these investigations once they're complete and made public. We, of course, have our teams ready and dispatched after a massive event. We've done that in Guerneville. We did it after the earthquake. We've done it after the fires. Once we get a green light from first responders that it's okay, we're going to be there to make sure that we are answering your questions, and more importantly, we're advising you on what next steps should be. And so we encourage folks that after a disaster, not to sign anything, not to commit to anything, to call our number, and we'll be able to assess you and give you the proper guidance in terms of what would be an appropriate decision for you. And of course, these are all individual. These are all dependent on your individual case. So talking one-on-one with somebody from the department is highly encouraged, as opposed to just trying to figure it out on your own. We want to be able to help you. This is our number. This is our website where you can file a claim as well. And again, we wanted to come to the community, give you an idea of what we're looking at in terms of issues in the WUI. I want to thank you for being here. We have some questions, and of course, we don't have time for all the questions that have been written on the cards, but we are going to collect those, and we're going to have our staff get back to you. If that means on an individual basis, we'll do that. But we are also going to open it up for questions and allow our Deputy Commissioner, Tony Signorelli, who is the head of our market conduct, consumer services, to help answer some of the questions and get into some of the details that if we can. And then also have our special counsel, Joe Lauscher, who has both are veterans of the department and have assisted people through so many of, unfortunately, these fires and catastrophic events. Again, I wanted to come here and thank you for listening to us. We want you to know that we're here. We have our entire team here to help answer these questions. And Joel and Tony, come up, and we will we'll be answering some of the questions that were written, and we're going to continue to collect some of the questions. And of course, again, like I said, our staff will be here to make sure we're answering your questions as we move forward. Thank you so much for giving us your time. I know it takes a lot of your busy schedule to come here, but we really appreciate your attendance and appreciate, we know we have some folks in the overflow room as well that we're going to also try to get their questions answered. Thank you so much. And we have staff's going to be around to collect those questions as well.
This way so it doesn't block the
We're
river.
gonna move. How's that? Quite good? Yep. Oh, now you gotta move this way?
Joel's gonna, unless we're just gonna both stand on this side, that's fine.
Okay?
Yeah, what was wrong with the other way? We were blocking the number?
The screen of the questions. But, you know, just remind, we have all these pamphlets. Everything.
Yeah, I'm good. Does this work? Yes, it does. Pardon?
No paperwork to take?
No paperwork. Well, if we have some, it's at our table right there in the third kind of, yeah, California Insurance Department's labeled right over there.
All right, what do you think?
Huh?
What do you think? We'll get started?
Yep.
All right, I'll start it out.
Okay. Okay, everyone, we're gonna get started. I'm just gonna have to ask you to take your seats again. I hope you got a moment. Okay, thank you all for being here. If you could take your seats and we will get started. Thanks.
Okay, well, I'll mention it and then you can turn it off. Well, thank you everybody for being here tonight. Thank you, Commissioner and other officials. My name is Tony Signorelli, Deputy Commissioner for our Consumer Services and Market Conduct. And with me is Joel Lauscher, Special Consultant for the Commissioner. I know we don't look at, but between us, we have about 60 years with the department working with consumer protection issues. So we're here to answer questions. To give you a little idea, a little background, we received about 50 to 60 questions in advance through the county website. We compiled that information. Some of them were very similar. We also have some cards that we passed around today. We are not going to be able to get to every single question, but we're going to do our best to get to every question. But as the commissioner mentioned, we have staff here to get your information and follow up with you, or you could go to our website, get information there, or file a request for assistance, or just an inquiry and ask us a question online, or talk to our live officers at our 800 number. And in addition, we also have a lot of guides, some information guides that'll be of assistance to you in the booth that we have right over there. So I'm going to get started on the issue of availability. And that's obviously a big issue. You know, am I going to be able to get insurance? Am I going to be able to keep my insurance? And so I'm going to go through some of the questions and answer them. The first one is, I'm building a new home in Nevada County. I've talked to several people in the area that were either canceled by their insurance carriers or have received large increases. Is it possible for your department to work with the insurance companies to encourage them to re-enter the market or lower their rates to insurance so that the homeowners can for the homeowners that have taken steps to protect their homes and mitigate their properties? And we received about 5 or 6 questions very similar to that. And as the commissioner mentioned, yes, we've been talking to the insurance industry, the CAL FIRE, other responders, local officials, the governor's office, and the legislature on all of these issues, trying to find solutions. What can we do legislatively? What can we do administratively? What can we do just in terms of working with the local communities and trying to figure out how they can best get their community to a point where the insurers will come back into an area if they've restricted their coverage. So that's what we've been working on, and we will continue to work on that. Another question, non-admitted insurance companies wholly owned by admitted companies in California. And so, you have an admitted company in California, and you might buy a surplus line insurance policy because you can't find admitted traditional coverage, and that's called a non-admitted or surplus line insurance company. So the question here is, why does an insurance company that's licensed here have an affiliate that sells you insurance through the surplus lines market only when they won't sell it to you through their admitted products? Well, to go on with the question, is there collusion here? Well, what we're seeing is that most of the non-admitted companies that are selling, especially in the WUI area, are not affiliated with the major insurance companies that are admitted here. For example, Lloyd's of London is one that doesn't have a license here in California, but they're one of the predominant surplus lines companies that are selling home insurance products here in California. And so we're not really seeing any issues of collusion, but it is an issue that we are taking a look at to making sure that the insurance companies that do have business here, we encourage them to sell their products here rather than use their affiliated companies to bring their products in from other states. And then with regard to surplus lines, it's an important issue because as availability becomes scarce, you're looking at either purchasing a fair plan policy with a wraparound, or it's called a difference in condition policy on top of that, or purchasing a whole policy from a surplus line insurance company. And so the question there is, what are these surplus lines insurance companies and are they viable? Are they going to be able to pay my claims if I have a claim? And for the most part, yes, they're eligible surplus lines insurance companies that have some degree of testing here in California with regard to their solvency and capital. The one caveat, though, is with an admitted company through the traditional market, they're part of what's called the California Insurance Guarantee Association. So if one of those companies goes broke, the Guarantee Association will pick up those claims. With a surplus lines policy, that will not be the case. So that is one risk that you're taking. We haven't really seen that in several years since, maybe the early 90s, since one of the surplus line companies, other than, let's say, in the workers' comp area and in other areas, but in the homeowners market where a surplus lines company has gone broke and people were left without claims paid. So that's just something to keep in mind when you're deciding whether to purchase with a fair plan policy, which is backed by the insurance industry, and getting that wraparound or difference in condition policy, or whether you want to go with a surplus line insurance company.
Well, I appreciate what you're saying. We do want to get to everyone's questions, so we'll start with the written ones. But I'll say this, the surplus lines carriers tend to write a very small volume of business in California. So unlike Allstate, which probably has over $1 billion in business here, has the small company would write very little business. And they have not only their own reserves, companies buy reinsurance themselves to cap their own losses. So it's not solely based on their own surplus.
And we're happy to look at any of the particulars, offline, and if you have specific concerns that you would like us to take a look at, we're happy to do that. The next question is, we did our due diligence for the insurance company. We paid to have our trees cut back. We have a masticator come and remove dry brush and limb up all the trees. And the insurance company doesn't even send anyone to look at the property, and they just give us a blanket non-renewal because they don't want to write anymore in that zip code. Yes, that's what we're seeing. There's a couple different issues here. There are some insurance companies that decide I'm over-concentrated in a certain area, and they make a business decision to stop writing new business or even retract a little bit with their current book of business to reduce that level of concentration so that they can remain viable and insolvent, et cetera, et cetera. And the other way this occurs is when you have a risk score with a Fireline or whatever the company uses as their risk score, and let's say the scores change or there's a reevaluation of the satellite imagery that the commissioner showed you earlier, then scores can change or situations can change, and the insurance company will then reevaluate whether they want to renew you or not. Or they could even say, we used to renew people at a score of, let's say, a score of 6 on a Fireline out of 30, but now we're not comfortable with a 6. We're going to go down to a 4 or 5. And so you might have been perfectly viable at 6, but now since they've reduced their threshold, they're no longer going to renew your policy because you're now above that threshold. So those are the things that we're seeing. Obviously, those are the issues that we want to work on with that the commissioner mentioned earlier with regard to if you mitigate your home, you harden your home, and the community mitigates and provides fire breaks, et cetera, and reduces that risk, that the insurance companies will then agree to write those homes in those communities. And that's really the end goal. It's not a short-term goal. It's going to take some time and some work on everybody's part, but that's really the goal here.
Yeah, and I'll add, the commissioner is saying communities. Tony is saying in the community. Again, as we showed on the slides with the imagery, they don't underwrite one home at a time, and they're not looking at just your property, and that's why community efforts are so important. So if you just do your property and your neighbors do not, or your community does not act generally, it won't change the satellite imagery. So it requires a real community effort.
The next question was, can we get liability insurance and an umbrella policy without the fire insurance if we own our own home without a loan? And the answer is yes. There are companies that sell standalone liability coverage and umbrella coverage. So if you decide that you don't want to purchase fire insurance, which we wouldn't recommend, that you do have that ability to purchase standalone liability and/or umbrella coverage over that. And that's another thing you could look at too if you're going to purchase the Fair Plan coverage, which doesn't have liability coverage in that coverage. You could look at purchasing a liability policy to add that additional coverage to your policy, to your home and to your family. With regard to the Fair Plan, the questions were varied, but they were, I heard the Fair Plan takes your money, but sometimes delays coverage. Is that true? And how is the coverage? For the most part, we're seeing if you want to sign up for the coverage and you're going to a agent or broker who's registered with the Fair Plan, already registered with the Fair Plan, that it's pretty quick to get bound for coverage and get your effective date pretty quick. There are going to be some situations, depending on either certain locations, if you have certain access, or maybe in certain situations that may require an inspection, which could delay that process. But for the most part, we're seeing people are getting their coverage in a couple of days. If you're thinking that if you're seeing where you're trying to get this coverage and you believe it's going too slow for some reason, please let us know and let us take a look and see what the situation is, whether it's something particular to your property or whether it's a snag somewhere that on the broker side or the Fair Plan side that we could probably fix. This one is, I was told by an agent that since my dog, I have a large dog, that could be another reason why I'm not getting renewed. And I raised that question because most of the people that we're seeing, 80% of the complaints, let's say, we'll get at the Department of Insurance for people that have been non-renewed in the WUI areas, it is for fire risk related issues. But it may not always be that. And so I encourage you to take a look at the reason why you're being non-renewed and see if there's a way to remedy that. I'm not saying get rid of your dog, but let's see what that reason is. It could even be if you do certain, maybe minor mitigation, you could resolve the issue versus it being just a generic score. Your score's too high, or you're in a zip code that they've retracted from. So we'd be willing to take a look at that for you if you think there's a reason that we might be able to resolve.
Companies still are using larger dogs, trampolines, any number of things that they don't write that are aside from fire risk.
This question is regarding, well, they have the Fair Plan now, but they were non-renewed by their insurance company, and the question was, do I have any recourse if the insurance company did not send a renewal notice? The answer is yes. The insurance company is required to send you a renewal notice at least 45 days before they terminate that policy. So if in fact that did happen, let us know. We can look at that issue and look at their mailing and what documents they sent or didn't send, and we can resolve those issues if it's pretty clear that they did not send you a renewal notice. The last question here is, can I purchase an insurance policy in California based on actual cash value rather than replacement value? Actual cash value, there are different levels of coverage you could buy for your home. Actual cash value is the least amount of coverage you can buy. The next level of coverage is full replacement cost of your home up to a policy limit. The next is replacement costs with an extended replacement cost on top of that. And then the next level is guaranteed replacement costs. Regardless of what your limit is, you're going to get paid to rebuild your home no matter what it costs. There are very few, if any, companies left that sell the guaranteed replacement cost coverage, but those are the different levels of coverage. You can still purchase the actual cash value policy in the traditional market, but it's very uncommon, and not every company offers that. The Fair Plan does offer it, so if you are with the Fair Plan, you do have the option of purchasing the Fair Plan coverage at an actual cash value basis, or at the higher level, the replacement cost basis. No, I think it's free. True. And then just lastly, before I turn it over to Joel on affordability, we do have a document at the booth over there. It's called the Top 10 Tips for Finding Residential Insurance. I encourage you to take a look at it. Also go to our website. We have a lot of tools on our website, comparison of policies to see which companies offer certain kinds of coverages and that sort of thing, as well as a premium calculator. That'll give you ideas, and as well as a list of companies that are writing. Not all of them are going to be writing in every area, but it'll give you more options available to you than, let's say, you're in a medium area where you may only know of a couple brokers or a couple companies. It'll expand that out for you'll be able to do a wider search for your coverage. And I'll turn it over to Joel.
Okay, I'm going to talk about affordability of insurance, or you might think it's better unaffordability. Inaffordability of insurance is the real complaint here. Can everybody hear me? Closer? Better? All right, thank you. So one of the first question here, even though I've had no claims, and I think they mean not close proximity to a fire, or I have close proximity to a fire station, I've been non-renewed. And this kind of plays into some of the availability piece, right? And in fact, it is a availability. Why is a person non-renewed, even though they haven't had claims themselves? Is because the company is underwriting for other considerations. And it's more, again, back to that community level underwriting, that it doesn't matter if, anything specific to your property or your particular situation. It's looking at things on a broader level and underwriting for wildfire risk in particular and using that score. One of the things people do ask about, I'm next to a CAL FIRE station, and I will say that generally these models don't take into account CAL FIRE stations. That's because CAL FIRE stations are typically dedicated to brush and forest fire and not home fire defense. Quotes from other carriers use Fair Plan and are roughly twice the price of the outgoing farmers coverage. So if you've had farmers coverage in the past, and you might have been with them many years, and now you've been non-renewed, and you go out to get a Fair Plan policy, you will find, yes, that the Fair Plan policy, their rates have already been adjusted to recognize a wildfire risk. So Fair Plan rates, if you are in a high wildfire area, are much higher than your farmers' rates might have been. However, some of you who may still be with farmers may recognize that the farmers' rates are also going up significantly. So it can be a timing issue. You may think, well, this Fair Plan premium is way out of line with the farmer's premium I had, but likely people with farmers' premiums are also experiencing double-digit rate increases. It is an across-the-board experience because, unfortunately, the wildfires of 2017 caused insurers across the board as an industry to have a 200% loss ratio. So, their perspective, right? They paid $2 out for every dollar they took in, and that's even before expenses or anything else. The worst year they've ever had. And it was followed by the second worst year they've ever had in 2018. So as they moved to adjust their rates, all of their losses came from a high wildfire risk population. And their rating plans thus adjust to put those rate increases purely on those high wildfire risk areas. So, and they're taken, whether the fire was in your area or somewhere else in the state, typically it is looking at wildfire risk at a score level that isn't specific to a zip code or a county line. It's based on homes of a certain wildfire score created the losses. So all homes with that score get a rate increase because the likelihood of future losses are at those scores rather than at the low urban score. So this is one of those things where we don't want to come here and defend insurers, but we want to explain how it works. And this is how it works. You're class rated, you're put in groupings, and if the kind of grouping you're in, which is high wildfire risk score, or one with a high protection class, right, that you don't have a city responsive fire department close to your home, the scores for those areas went up significantly. Our primary residence in Truckee just received a non-renewal. Our rental property had insurance that was very expensive this past year and now had to resort to the FAIR plan. Not good coverage and very expensive. We can't afford these type of increases with our current financial state. This is, we are sorry to hear this kind of thing. I mean, we want your rates to be as low as possible. The department has a rate regulation branch. We review every rate filing. If you talk to the insurance industry, they say we were over aggressive in reducing rates. Talk to homeowners who are experiencing these increases, they think we're just allowing any rate increase unless that increase is supported with actual loss data and is actuarially sound. In other words, you take recent loss experience and project, this is what happened last year or these last few years. What do we expect to happen next year? Sometimes, you don't expect that thing that made last year bad to occur again, and sometimes you do. And as the commissioner pointed out, with 10 of those largest wildfires in state history occurring since 2015, you have to expect that there's a great possibility of future wildfires in 2020 or 21. And that's why what really changes the dynamic here of preventing that from happening is really about mitigation. Insurance rates respond to risk and are just a projection of what they believe will occur. The way to change that is to change what's likely to occur, right? And that takes all of you. So what's so great actually about all of you being here tonight is you are concerned enough to be here, and that really hopefully turns into you're concerned enough to act, because you do have to act together, again, as a community to make a difference. Let me see. So here's one that is a couple people have posed. Why is there no similar program such as earthquake insurance, flood, or wind pool? The average cost of flood insurance in California is $793 per year through the National Flood Insurance Program. I ran my home through the earthquake insurance calculator, and that was $275 per year. And I checked for Texas, and they had a Texas wind insurance policy was about $1,600 a year. Why can't we do that essentially for fire? So, you know, it's a great question. I can only say this. You know, this is a consideration. In California, we already have the FAIR Plan. The FAIR Plan's rates are expensive, but that's because they are based on losses. Earthquake premiums in this area are probably relatively low because your chance of an earthquake are relatively low. And beyond that, earthquake insurance carries a very high deductible, 10, 15, 20%. The likelihood of your damage exceeding that amount is limited, right? So most earthquake losses don't destroy the entire home. However, a wildfire loss tends to destroy the entire structure. So you're comparing very different perils, and that's why they have a very different cost profile. And wildfire happens to be, you know, one of the most destructive. Flood program, to the good fortune of many people who have that coverage, is through a federal program generally. That program has been undercharging as a rule and has a massive debt, but it is federally backed. And so the government is picking up those losses. It would be great if we had that luxury for fire, but we don't. There is no program that is going to sell a rate that isn't actuarially sound and then make up for the difference through taxes the way the federal government does. At least no such thing is contemplated. So what can the insurance commissioners do? You know, this is kind of the broad overview to mitigate huge increases by insurance companies. When insurance companies bring those rate filings in, we have actuaries who are reviewing all of those files for major increases and determining that the data is sound. The commissioner pointed out our authority in statute is fairly limited. And, you know, you're probably hearing me say a lot of things that maybe you don't want to hear. But if the insurer can justify the rate, the state or the State Department of Insurance does not have the authority to say, no, you can't have that rate. And if we did, then the insurer would say, okay, then we don't want to write that business at all. So we're often, you know, put in the position of, you know, if you don't approve the rate, you know, we're going to non-renew. And we don't have authority to not approve the rate if it is justified. So the rate increases have been through a process. They're not whatever the insurer wants to charge, unless you go to the surplus lines where it is unregulated, and that's why they can charge a higher premium. But this is how it works in California. A question, what will it take for fire risk? I see I'm not using this enough. What will it take for fire risk of homeowners in rural counties to be equalized with urban counties, as has been done with collision risk of urban counties regarding automobiles. It looks like this must happen to bring down homeowners' insurance costs in rural counties. So to some degree, in personal auto insurance, territory is a little bit toned down by the way the rating plan works. But personal auto and homeowners are two completely different coverages in law. Thanks to Proposition 103, the department has a lot more control over the rating factors that are used in private passenger auto. There are 3 mandatory factors in law, and the rest of the factors, the commissioner has a role in choosing what those factors are. There is no such limitation in homeowners insurance or any other property casualty line. So for homeowners insurance, territory plays a role in rates and possibly a larger role than in auto. But I will say auto, while there is groupings of zip codes to kind of mute the overall effect of territory, auto has very major differentials based on zip code as well. One more, maybe? Here's another. If wildfire was rated as a separate peril, wouldn't that have a positive impact with better data, loss control, and underwriting? So this is separating out wildfire from fire, perhaps, as a rating kind of variable. I'll say now, right now, a lot of companies do what's called by peril rating. So there's a separate whole premium calculation for fire compared to water damage, compared to wind. And so wildfire and fire are all one. And I don't think that if you are in an area that is subject to wildfire, being further parsed out of fire as a peril and trying to distinguish between the two would be to the advantage of communities that are more subject to wildfire than other communities that are less subject. I would think it actually might be to your detriment. Let me do one more, actually. It is my understanding that nothing we do in the way of fire prevention will impact our premium. I hear that premiums are based on the county you live in, not the risk associated with the care taken of the parcel you own. Is that correct? That is not entirely correct. There are a lot of factors that go into a rating plan for a fire policy. One is the type of roof. So if you have a wood shingle roof, you are going to typically pay much more than people without a wood shingle roof. It's a significant difference. There are homeowners, companies that have FireWise community discounts. There are some companies that have a mitigation discount of some kind. So there are a lot of factors that go into the home in terms of condition and the territory and the protection class. So maintenance of your home is essential to keeping your coverage. So thinking that, if I don't get a discount, I might as well just let my property go, that does not help you. You really want to do all you can. And I think, you're hearing a lot that the department doesn't have a lot of control over where an insurer writes, and that if it can justify a high premium, then an insurer can do that. And this is true. So what you're really left with is doing what is within your control, right? So you can only do the best you can with your own property. You have to take whatever steps you can to make it the best mitigated property and put its best foot forward as a property to an insurer as you shop around. You can really only work to encourage your community to work together so that the rest of your community impacts you positively, right? So that they make you look good and you make them look good. So everybody needs to do this with their property. I can tell you in the community where I live, we have requirements for brush abatement and enforcement policies to make that happen. They have been ignored for years because, you know, your local fire department doesn't typically want to come out and do that kind of thing with people, right? They'd rather be cooperative. They'd rather get you to do it voluntarily. And so, you know, they try to avoid doing some of that. But I think everywhere, fire departments are looking at this and saying, you know, unfortunately, we're having to enforce those standards because they mean so much more to everybody in the community. You're not just a hazard to yourself, you're a hazard to everyone if you don't do that abatement. So do what you can at your property as a community. And, you know, Tony pointed out that we have a top 10 list there for shopping around. You know, unfortunately, sometimes your local agents have placed a lot of business for the carriers they represent here, you know, in this community with the insurers they represent. You may have to call a city further away and find out what companies an agent there represents to find maybe there is an agent that represents some companies that haven't written so much business here. So what I want to say is don't give up too easily on the shopping component. You know, there is a list of 50 or so homeowners insurers. Most agents represent 3 or 4 or 5. So that doesn't mean you have to go to the FAIR Plan just because your agent didn't have another market. Your agents are doing the best they can typically, but you might have to seek an agent and find out, well, what were the 4 companies you represent that said no? And call another agent and say, what companies do you represent? And see if they represent someone other than those 4. And if they do, see if that company will write you, and maybe another agent after that. So it really takes a process. That's why Commissioner Lara said it's so important to we're trying to get more time for you to shop around. But shopping around is key. So you want to mitigate your property to make it the best it can be, and then you want to do a shop around and make sure, you know, you're getting the best price you can, the best coverage you can, and hopefully avoiding the FAIR Plan. You want to do the miscellaneous? Where is this? Okay, I'll take 2 questions and then we have to move to the next questions. Yes.
Oh, gee, I called Sam Sneed out of San Diego, and he can get this policy for me. Sam doesn't know what's going on. Chances are he's going to rate something up, try to sell it to you, and it's going to cancel because he has no idea what's going on up here. So I don't know if that's really a good idea to tell everybody here to start calling out of our county because they don't know what's going on, and it's a big problem for us.
I appreciate that. Yes.
Is we have insureds that are requiring our insureds to mitigate their property, to cut down trees, to get rid of their brush, to get, you know, the house looking like it's in a desert. And they've spent $4,000, $5,000, $6,000 to do this. And XYZ company comes back and says, thank you very much, but we're canceling you anyway. What recourse does an insured have after they've spent all this money thinking that they're going to get renewed with the carrier, and the carrier comes back and still non-renews them because he doesn't like the entire area, even though that insurer has required them to do all of this mitigation work. And we hear that probably once or twice a week. I've spent $5,000
Okay.
and I'm still being canceled. So what recourse is there?
Okay, yes, two questions, and I will give you two answers. I'm not advising anybody to go to another city to get an agent or broker if your own agent has taken care of you. I'm only saying if your agent has no options for you other than the FAIR Plan, you might want to look around. And I say that not to disparage local agents. Stick with the agent who's been loyal to you and taken care of you. I'm just saying if they don't have an option, then move on. And I agree that can happen. You can do that? Okay, try another agent in town first. I agree. In terms of your second point, which I totally appreciate, an insurer decides what they're willing to write. And again, this is another difficult truth. They can decide on the risk scores that they're willing to write up to a risk score of 10. And then you're okay. And the next year, they decide we're only going to write a risk score 6. And they're allowed to do that. And the unfortunate thing, a lot of times, to your point, you can make efforts. I won't write you unless you put on a new roof. You put on the new roof. You think you're good. And now they're going to say, yeah, but you were a new roof, but you're a risk score 10. And we've decided to only write 5s and above. And
These are people that they're getting the insurance companies come out and done the inspection.
okay,
Everything risk scored, everything's all the same. They're doing all this work, they're spending all this money.
right.
And they're still being canceled. And they're spending, to get a tree cut down here takes a long time, right? Because these guys are really busy trying to mitigate for us. It could be 4, 5, 6 weeks before you can even get them out there to get a tree down. And then they're doing all this work, they're spending all this money, and then the insurance company, everything is still the same. There's no PC class change, there's no
Right.
fire score change, and they still cancel them after they've spent $4 or $5 grand.
Okay. Then you want to call the Department of Insurance, right? If there's nothing.
Yeah, that's an issue that we certainly could take a look at. If there's especially if it's something in writing where they say, okay, here's your inspection. If you do these 3 things, we'll renew you. And then you do those 3 things and they renege. Right. Well, that's going to be maybe part of maybe your inquiry or other agents and consumers to maybe get something in writing saying, okay, I'm going to do this, but does that mean I'm going to get renewed? And so that's really something that we would take a look at if you had some kind of documentation trail. Absent that, if they didn't commit to renew for that, it's really difficult for us to resolve that issue. What I'd like to do is get to as many questions as we can that we have. We have about 80 questions here. Some of them are similar to what we've already responded to and received in our advanced questions, but we'll try to get through as many as we can. A couple of points. The Commissioner's PowerPoint presentation will be online on the department's website in about a week. So if you want to have access to that, we'll have that in about a week. And I'll just start out with, we received a number of questions with regard to PG&E and utilities and what can the Commissioner do with regard to the responsibility of PG&E and that sort of thing. The department does not regulate PG&E, so any issues with PG&E, we're not really in a position to address or force PG&E to contribute to this problem or resolve this problem. We just don't have any authority over them. They are one of the stakeholders in the many stakeholders that we have been talking to in terms of government agencies and private entities and insurance companies and consumer groups, but it's not something that we can actually directly resolve. We'll get to a couple questions, and if you want to pick a couple out. The first one is there a possibility that the state can assist in recommending the insurance companies that use current satellite to determine whether they're going to cancel insurance? Well, virtually all of them use it. So there aren't very many companies that don't use the newer, so-called newer technologies, satellite imaging, fire line scores, and other similar scores based on satellite imagery. And so they all basically use that. There are very few companies that use the older method that was on the PowerPoint that the commissioner raised. Also, I'll read this while I'll have to digest this one. I don't know if you have a question you want to.
Okay, so one here is, what do you do if your neighbors do not clear their land and it affects your it affects your ability to get fire insurance? So probably that relates to notifying your fire department and having them do whatever enforcement effort they can if your neighbor's property is in violation of an abatement or mitigation standard for the town or county.
There's a question with regard to the FAIR plan. The question is, can you provide how much oversight there is as to how much excess money the FAIR plan is collecting compared to what it pays out in claims? FAIR plan is essentially a zero-profit entity, and so it cannot collect and keep any of the money that doesn't pay out in claims. So if it has excess money, it would get distributed out to the 100 insurance companies that write in California, that back the company, as well as if they, let's say they were at a loss of $100 million on a big wildfire incident, and they didn't have the money to pay it, they could then go out to the insurance companies and recoup that $100 million on a pro rata basis from those insurance companies. So the FAIR plan is not collecting more than what it pays out in claims. If it ever does that, and we see that as a trend, we ask them to come back in for a rate filing to reduce their rates.
Okay, I have one here. Define brush, and how does that work, the term? Is brush dead leaves and grass, or is it any plant near a house? So what insurers are typically looking at in terms of brush is referring to an open space near the home. So that used to mean, in kind of the old school, was within 1,000 yards of the home. Today, it's looking at that satellite imagery. It isn't. So leaves and grass at your home, an insurer really only underwrites against that when it sees a lack of maintenance, right? So they are concerned about homes where there's a lot of leaves and all collecting on the roof, and it looks like it's not maintained, or the front yard has gone and overgrown and thus presents a means to transfer the fire to the home. But generally, referring to a brush area is referring to an open space within range of the home.
Another question is regarding the FAIR plan. California FAIR plan is not fair. With non-renewals, fire coverage has gone up 4 to 5 times. This needs to put under control with full coverage, not just fire coverage. What are your plans to correct this? Over the years, and we would agree, I mean, as the Commissioner mentioned, the FAIR plan coverage is a bare bones policy. It covers fire and a few other types of losses, but it doesn't cover liability, doesn't cover theft to your belongings, and doesn't cover water damage, that sort of thing. So if you need to purchase and fully cover yourself as you would for a homeowner's policy, you need to purchase that wraparound policy called a difference in condition policy. So now you're buying 2 policies. So what we're hoping to do is to get more options available with the FAIR plan, so you don't have to buy that second policy. You can buy liability, for example, and buy more of the perils with the FAIR plan, so that you're just buying the 1 policy and not having to pay for 2 policies, which makes a greater expense.
Are you aware of any companies that have denied claims due to not having defensible space? So once a policy is written, if you have a loss, a covered loss, an insurer really can't then deny the claim at that point in time unless there's some kind of criminal negligence involved. So the fact that you don't have a defensible space is a thing an insurer has to underwrite in advance. If they sell you the policy, then you're covered.
One more fair plan question, then try to ask another one. But do insurance brokers have the ability of adjusting California fair plan pricing independent of the state formulated pricing? No. A broker has to follow the rating plan that the fair plan submitted to the Department of Insurance, and they can't deter from that. They can't charge you more than that, and they can't charge you less than that.
Here's one that is, how are properties evaluated? So there are many levels of evaluation that happen of any application for insurance. Some of them are related to your claims history. Claims history plays a big role in whether you're going to be eligible for coverage or not. And I would say, to anyone generally that you want to avoid making a claim against your insurance unless it's absolutely necessary. So typically you want to carry a high deductible so as to, get some kind of discount towards your rate. But they're also evaluated again based on your location. Access, as one of the issues that came up with that modeling satellite imagery, they want to make sure that a fire truck would be able to get to your property in time to make a difference. So, in today's evaluation, if you are several miles up a, narrow road, that is going to be a major factor in not getting coverage. And that's where the FAIR Plan would step in. Age of home is one. Yes?
Allied, which was out of Minneapolis, and they sent me notice that if I did dust and stow, they would consider it. So I did all the dust and stow, and prior to that, a couple years before, I'd already spent $4,700 in removing trees and such. So I did what they asked. I took the pictures, I mailed it to them. They looked at all of that, they sent it back, and they said, oh no, you still gotta do such and such, and we'll consider it. But then we still might not, and I thought, they're just gonna keep jerking me around. So I got the California Fair Plan, it has been bundled. I thought I was gonna be fine, okay? I wrote it on a card, but you haven't come up with a card yet. A month ago, I received a letter from the California Fair Plan, and they said if I don't have my roof redone or fixed in some way, as of March 2nd of next year, they are going to drop me. Well, I called the broker and I said, from what you're saying, and yes, they sent somebody down taking pictures. I said, can I have a licensed contractor, or do I have to have a licensed roofing contractor? He said I must have a licensed roofing contractor, and they must send an affidavit in. I must send an affidavit in, and then they'll still consider whether or not they will keep me. Now, I already have the plan. Why are they jerking me around with this after the fact?
That's a great question. You're Marjorie? Yes, I was just about to read your question. We would agree. The FAIR Plan is the insurance company of last resort. Unless there are very unique circumstances, they shouldn't be making these kinds of requests. Right, understood. Understood. So those are the kinds of issues, and we received probably 3 or 4 other questions similar to that in the advance, as well as in some of the cards, with regarding FAIR Plan making requests for certain repairs to be done, or they're going to non-renew you. I would suggest that we have your information, but that anyone that is in that situation should contact us so that we can get with the FAIR Plan. And it looks like we have some time. to make sure that they're properly following the rules they're supposed to follow, which is to insure virtually every property in California, as long as it has running water, electricity, there's not a big hole in the roof, and has windows, that sort of thing, versus being nuanced that it's a 10 years, 20 years, and we just think you should repair your roof, unless there's some unique situation that they would have to come back to us and support. So I think for anyone, including yourself, we would like to check into that issue and see what Fair Plan is doing to make sure that they're properly following the rules, and see if we can resolve that. And we'll definitely get back to you personally on this, yes. No, it'll be less than that. We're going to be in touch with you sooner, in a few days, and then letting you know that we're going to get with the Fair Plan and try and figure out and see what's going on. How long that takes, it depends on, where this leads us.
So I have one. What can the California Insurance Commissioner do to regulate insurance company that they are not currently doing? So one of the things the commissioner mentioned, and we would hope that you would talk to your legislators, is about having a law that insurers would have to write hardened homes, right? Ones that had met mitigation standards. We believe if insurers had to write such homes, that the rates for those homes would, the loss ratio would prove that they deserve lower rates than homes that weren't hardened. And it would at least give people a path towards a guarantee of coverage, right, if they did all the right things. We're hearing us say, we're sorry to say now, you can do a lot to mitigate your risk and still have your insurance company decide we don't want to write that level of risk. Hardening, we mean, what would you have to do, like coming up with a standard that if you did this, you put mesh screens around all your vents, you moved all non-combustible materials away from your home. For example, you wouldn't be able to have a wood deck abutting your home, right? It'd have to be a non-flammable material. If your fence comes around and abuts your home, there would be something between that fence and your home to prevent the fire from moving from your fence into your home. It might involve enclosing your eaves so that embers don't blow and kind of get in the circling up in your eaves till they catch. So it would be set forth a set of requirements that if a person could do this to their home, and there's an expense here initially, but that if they did that, they would have coverage. That is one that would help. The other thing that the commissioner mentioned, that there's some legislation, but it doesn't go as far as the commissioner is trying to push to go, is to give people more time before a non-renewal kicks in. We understand that people have to remove trees and do that kind of thing, and 45 days doesn't give them enough time to do so. It's very important to try to preserve your renewal if you can. So when you get that notice, you want to reach out to your insurer, not just say, wow, I better, find somewhere else. Well, you should try to find somewhere else, but you also should call your insurer, your agent, to contact your insurer if you have an agent, to say, what can I do to maybe keep my renewal, right? Can I remove these things and have it done? And sometimes they may jerk you around, but generally, and then you can contact the department, but generally, hopefully, if they tell you something that if you do it and you get it done, that they will renew you. And we think giving you more time to get that done would be important for a lot of people. Because for some people, they might have to move a propane tank, right, away from the home. That's a big one for insurers. They don't want propane tanks next to the dwelling structure.
Okay, this is a question. I recently renewed our Allstate policy. Can they still cancel the policy at any time? Also, can they raise the cost of the policy we recently renewed? No and no. Once you've signed on for that year, they cannot renew you what's called midterm. They have to
Non-renew.
they can't cancel you midterm. They have to wait until that period, let's say that year is over, and then decide they can non-renew you, if, based on their renewal guidelines. But during that whole year, they can't just they just can't cancel your policy unless it's a very unique situation, what's called an increase in hazard. Something moved into your neighborhood, a nuclear power plant just moved in, or something that increases the hazard that wasn't there that previously, whatever that could be. Then they theoretically could cancel your policy. But all things being equal, they can't cancel your policy midterm, and they can't increase and change the premium. Once you've agreed to that premium, it's good for that entire period of time, for that full year, for example.
Here I have one that, why was my insurance non-renewed and my next door neighbor was renewed? We both have Lloyd's of London. Things don't seem consistent. So here is one, it's about really talking to your agent. Even for a surplus lines carrier, they should be giving you the specific reason for the non-renewal. So you should be able to verify that it is accurate. And generally, an insurer is meant to act consistently. So they can't write somebody that has, if they non-renew you because your home is 40 years old and they keep your neighbor whose home's 45 years old, even older, that would be an issue. But it can be any number of components that make a difference, right? Maybe it is that your home is older and they decided not to renew homes past a certain age. Maybe there is some characteristic about your home that is different. You've had a water loss. You have a propane tank next to the home. You have a wood deck. There's something potentially different about your home and your neighbor's home that is making that decision. But hopefully, and especially if you have the same agent, they could tell you that reason. Is this your question? Or that is true, that insurers are trying to avoid a concentration of risk in any given area to avoid major losses from a single event. And that will cause them to not only stop writing more business in a certain area, but sometimes we are hearing, this is happening, that insurers feel they already have written too many policies, and then they decide to non-renew, not because anything has changed about any particular home, but they're just trying to reduce their exposure in a given circumference.
My neighbors do move away because I can't do fixed incomes, low incomes, below incomes, and they're so called middle class, and it's like causing a class action discrimination. And if you don't have more money, it seems like there needs to be a way to spread the fee across California, just like, get taxes are. And that's to be some other solution instead of unregulation, because it's going to just keep going up, and there's going to be more and more homeless people.
Well, some of the issues you're raising are kind of more social issues in terms of whether the state wants to create tax exemptions or grants. The state does have, there is a brace and bolt program for people that have earthquake coverage or even not to be able to get a grant of a small amount to help them reinforce their home. Those are things set up through statute kind of outside of the realm of the insurance itself. And, I understand the department recognizes a lot of lower income folks don't have the money to pay these major increases. But, unfortunately, the insurance companies, that is not how they determine their rates, right? It's not based on your income. They can't use that or other means of discrimination that aren't risk-related. But then it is up to a government program to decide that certain people need help and to find a way to help them. And that is something to also talk about your representatives, right? Can there be the possibility of some kind of program to help fund mitigation efforts, to help pay premiums for lower income people, maybe some kind of tax deduction. But for that, and again, it's beyond the scope of the Department of Insurance. It's really talking to your state representatives about taking some kind of action to help out people in these situations.
One question here is, how do we appeal a non-renewal? Well, two different ways. You contact the insurance company and make your case to them, but come to us. We certainly can take a look at the issue to make sure, number one, they have guidelines in place that are very specific to the reason why they non-renewed you, and if they don't, then we would force them to keep you on that policy. And if they did, then we would go through and make sure that the facts of your particular home match the guidelines. And while we're looking for other questions, many of them are very similar to what we've already talked about, and we do intend to make contact with each and every one of you. And so if you do have, especially if you have a live time constraint issue that you're dealing with, let us know so that we can look at that case, open a case with one of our compliance officers, and make contact with one of the department people that you see here, and we'll flag you for making sure that you get assigned right away, because we don't want you to get caught in us responding to general questions when you have an immediate need of our assistance.
Is this fair plan cancel this? Do you know who California? Do you think they know? Okay, this is a person that was non-renewed by State Farm, moved to Allstate, non-renewed again, and then decided they don't write modular homes. We did get I think this means California Fair Plan policy, and canceled again. So again, for the Fair Plan, there is almost no reason that they should be non-renewing a policy unless there's something really beyond the scope of expectation happening there, or there's no roof on the property, or nobody has lived there for a year. So this is one, if you have ever get non-renewed by the Fair Plan, similar to the roof issue, you should contact the Department of Insurance.
This question deals with, is there a way to remove wildfire as coverage in the insurance policy in these areas so that you don't have to pay, you can get renewed and you don't have to pay the high premium because of the wildfire risk, with the proviso that you could then qualify for disaster relief after a fire. That is not practical in a couple of different ways. The individual assistance, I think, from FEMA is about $35,000 or $38,000, and so that's not going to cover you if you have a major loss, a wildfire loss, and so you don't want to be naked on your coverage, and your lender might not accept that even so. And you can get low interest loans through the Small Business Administration after a disaster, but that would be a loan. It would be something you'd have to pay back. So it wouldn't be something that we would recommend.
Okay, this multiple question. Do we have any newly appointed carriers? Aegis, I think, really most recently expanded in California. I don't know.
We have a couple that have, over the last couple of years, have started, come into the state, and they started slow, but they are hoping to right in these areas and other areas. But it's not a mass, influx of companies coming to the state, because most of the companies are already right nationally, and they're already here.
Will the California Fair Plan increase the dwelling value limit? Yes, the Commissioner Lara asked the Fair Plan to increase its limits. They are basically getting onto the programming to do that. So they will be doing that. It most likely won't be available until April of next year, but the limits available under the Fair Plan will double from $1.5 million to $3 million. Is there a plan to regulate construction costs to assist in insurance premiums? You might guess that we have no authority over construction costs, and those are entirely market-driven prices. So the best thing you can do to deal with construction costs is to get several bids. It's based on competition, essentially. And I guess this is just following up that reflects in replacement costs. And yeah, that's accurate. Construction costs and materials are the drivers of replacement costs, the limits that you need to buy for your home. I don't know.
We'll read one or two more. But again, I mean, we intend, if you still have questions, we're happy to answer those questions through whatever process I previously described, either online, phone call, through these cards, or contacting one of our officers here tonight.
Yeah, I'll read one more here. Out of the blue, we were non-renewed by our company, American Reliable. They had covered us for over 40 years. They kept our liability coverage, but they were, and we were denied by every company we contacted. American Reliable said they left California and no option to keep them. So again, we've said this a lot, but it really comes down to shopping the marketplace. It's about going through every single one of those 50 or so insurers that write in California, one after the other, to see if one of them will write your property. And, I know I upset the agent a little earlier by telling you to go elsewhere. I don't want you to leave your own local agents if they're able to help you. It's just there are 50 carriers, and if they don't happen to represent all 50, you gotta keep looking till you find a coverage. And if you can't, then there is the Fair Plan. So, and if you get the Fair Plan, this person says they have liability coverage. I don't know if that means they just have liability or they have a difference in conditions policy, which covers all the other perils besides fire. It's critical to keep a liability policy on your policy, in your program. So I do want to recommend to people, if you do end up with the Fair Plan, know that that is not a homeowner's policy. It is a dwelling fire policy, scaled back coverage that covers fewer perils, and it does not cover liability or workers' comp. Your homeowner's policy has coverage for liability. If somebody trips and falls on your property, they can sue you. You want liability coverage for that. If you have somebody come on to do some work for you, or a babysitter, and they get hurt while you're paying them, a gardener, you have some workers' comp coverage, and you don't want to be without those coverages. So always make sure you have those, whether you buy a difference in conditions policy to accompany a Fair Plan policy, or a comprehensive liability coverage with the workers' comp as a complement to that Fair Plan policy. So realize it's not a complete replacement of your homeowner's policy.
Okay, I think we're going to end it here, and I want to thank you all for coming tonight, and I want to thank the mayor and the supervisors and all the staff that were here putting this together so that we can have a really productive meeting. But again, this is not the end of the conversation. This is the beginning of our discussions with you and other counties to see how we can resolve some of these problems. Thank you.